is if you want a stable coin, you can't have a US dollar coin because it's not stable, because there's no stability to the dollar, right? Why do you want to hitch your boat to a sinking ship, right? You're going to sink with it. It makes no sense. So if you really want a stable coin, you need something stable to anchor it, and that's gold. And there's no talk about that, but that's where the stable coin should be headed. Gold-backed stable coins, tokenized gold. That makes perfect sense. To tokenize US dollars makes no sense at all. What is the benefit of that? What is the benefit of holding a stable coin and earning no interest? I mean, hell, I could put my money in a money market fund and earn 4.5. Why do I want to put it in a stable coin and earn nothing?
PeterSchiff believes that silver holds the most explosive upside potential in the current market. He suggests that if silver breaks above the critical $40 threshold, it could ignite a swift rally toward $50. As of Tuesday, spot silver was trading at $38.50 per ounce, reflecting an impressive 25% gain so far this year. Market momentum is accelerating, with analysts pointing to a sharp rise in lease rates, often a leading indicator of tightening physical supply and impending price moves. Tavi Costa, portfolio manager at Crescat Capital, drew attention to this development, comparing the current surge in silver lease rates to similar spikes seen during the 2011 silver bull run, when the metal briefly touched $50. The tightening in lease markets signals rising demand for physical silver and underlying stress in the market, conditions that historically have preceded significant price jumps. These bullish dynamics in the silver market are unfolding amid broader shifts in financial policy. The U.S. House of Representatives recently passed the Genesis Act, a bill aimed at regulating dollar-pegged stablecoins. With strong bipartisan backing, the legislation is expected to be signed into law by President Donald Trump. While the crypto industry sees this as a step toward regulatory clarity, Schiff argues that it may not solve the deeper issue, eroding trust in the dollar itself. According to Schiff, Washington's relentless deficit spending and the strategic weaponization of the dollar via sanctions are undermining global confidence. Economist Jeffrey Sachs shares a similar view, warning that these internal policies, not external rivals, are driving nations to explore alternative monetary systems. Schiff maintains that a truly stable digital currency must be backed by something tangible, such as gold, rather than relying on a fiat base that continues to lose credibility. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
They're trying to tout these stable coins as the salvation of the dollar. Right? That's the biggest BS, to say that, oh, these stable coins are going to save the dollar because they're denominated in dollars. Well, so what? I mean, there's nothing that stops anybody anywhere in the world from issuing a stable coin that's denominated or backed by euros or Swiss francs or yen or Australian dollars or any of these currencies. I mean, so what's so special about a dollar stable coin? Absolutely nothing. People are saying that, oh, this is going to help create demand for treasuries because the issuers of stable coins are going to buy treasuries. Sure, they're going to buy treasuries, but that's not going to be enough to offset all the treasuries that China and Japan and Saudi Arabia and everybody else are no longer buying, let alone selling. And again, the stability of a dollar stable coin rests on the stability of the dollar. So at the end of the day, if people are losing confidence in the dollar, they're not going to buy dollar stable coins, right? They're going to be avoiding them or getting out of them, right? That's the whole reason that people are buying gold. The reason they're buying silver. By the way, during the week, silver got above $39 an ounce, right? We're almost at 40. I think we're going to be above 40 shortly. This is the first time since, I think, 2012 that silver got above 39. It pulled back slightly. I mean, I think it closed the week, around 38 and a half. Yet silver stocks are still maybe more than 10% below their peak. That's how much they pulled back on a tiny 1.5% correction in the price of silver. You got a dumping of silver stocks, which had made new 52-week highs as silver went up. And then, of course, it's very weak hands in the gold and silver mining stocks. People still don't have the conviction of this trade. It's climbing a wall of worry, and there's tremendous amount of worry on this wall, which is why I think these stocks are still great buys. Platinum almost hit 1,500. Remember, on my podcast, I specifically told people a couple months ago, when platinum was still below 1,000, I said, you got to buy it. Buy platinum. I said, gold is 3 times the price of platinum. Platinum's risen 50%. That was a great trade. Now, I think platinum may pull back a little bit more. I still like the silver trade better because I think that's going to explode. And I think once it goes to 40, the move to 50 can be very quick. But in the meantime, gold has been going sideways. It's like 3,350, 3,400. I mean, it's been trending sideways because the Nasdaq has been making new highs. It made a new high last week. The S&P made new all-time highs. In fact, on Friday, the S&P and the Nasdaq made new record highs. Now, they didn't close there. They actually closed slightly negative on the day, but they still printed new highs. That's why the interest in gold has temporarily taken a back seat. And that's really what's driving crypto. It's the appetite for risk assets. Gold has been going sideways. And in that environment, Bitcoin has risen along with the Nasdaq and all this extra hype surrounded by crypto week. But getting back to this stablecoin. So the stablecoins are not going to save the dollar because they don't increase the appeal of the dollar. People are saying, well, everyone's just going to use these stable coins in global commerce, and so that's going to create a need for the dollar. They're not going to use these coins. If the world is de-dollarizing, then they're going to de-dollar stable coin too. They don't care. They don't care how you wrap up the dollar, what kind of fancy packaging you want to put around the dollar. At the end of the day, it's still a dollar. And if I don't want the dollar because the U.S. is running huge budget deficits and huge trade deficits and imposing these tariffs, then why the hell am I going to want a U.S. dollar stable coin? I am not. I mean, ultimately, the way crypto is going, the way this thing ends up is if you want a stable coin, you can't have a US dollar coin because it's not stable, because there's no stability to the dollar, right? Why do you want to hitch your boat to a sinking ship, right? You're going to sink with it. It makes no sense. So if you really want a stable coin, you need something stable to anchor it, and that's gold. And there's no talk about that, but that's where the stable coin should be headed. Gold-backed stable coins, tokenized gold. That makes perfect sense. To tokenize US dollars makes no sense at all. What is the benefit of that? What is the benefit of holding a stable coin and earning no interest? I mean, hell, I could put my money in a money market fund and earn 4.5. Why do I want to put it in a stable coin and earn nothing? I've got plenty of liquidity in my money market. I could write checks. I could send ACH transfers. I could use my debit card. I could fund a PayPal or Venmo or a Zelle. Why the hell would I need a stable coin and give up all that interest and let the issuer earn all the interest instead of me? Makes no sense. The main purpose of stable coins is to trade crypto, to trade Bitcoin. I don't care about trading Bitcoin because I don't trade it. So why do I need a stable coin? But I can see the benefit of a stable coin backed by gold, because there, right, it's not easy to use gold as a medium of exchange, the way it is dollars. But if you tokenize it, it's very easy. Now, gold can be held by a custodian who can issue tokens, and now we can use those tokens to buy and sell stuff. We can use it as a medium of exchange. We can make instant payments around the world at basically no cost, or practically no cost, at the speed of light. So there is a viable reason to tokenize gold. And gold's not really paying interest anyway. So if I'm going to store my gold and I'm not going to earn any interest, well, why not store it in a stable coin where I don't earn any interest, but I get all the added convenience? I mean, that's how all the crypto people are constantly criticizing gold, because they say, well, you can't use it to make payments. Oh, yes, you can. I mean, you could use it even without tokenization. But yes, I agree. If I want to buy something from somebody in Indonesia tonight and I want to pay for it, I can't really send them some gold physically. But if I had a gold token, a token that was issued that I can then transfer to that person in Indonesia, and I can transfer the ownership of the gold that never moves, right? That's the same concept as a stable coin backed by US treasuries. The treasuries don't move. The dollars don't move. What moves is the token that corresponds to ownership of those treasuries, of those dollars, not really the treasuries, because you don't get any interest, but the dollars that are there. I can do the same thing with gold, but that makes sense. So we can conduct global payments in US dollars, in gold, with tokens that are tied to and back to gold. So that's what makes sense. That's what nobody is talking about other than me. And I think ultimately that is where we're headed.
As part of his campaign to remove Jerome Powell, President Donald Trump has repeatedly blamed the Federal Reserve Chair for costing the country hundreds of billions of dollars by refusing to slash interest rates. In a handwritten note shared on Truth Social, Trump told Powell, "You have cost the USA a fortune and continue to do so. You should lower that rate significantly. Hundreds of billions of dollars are being lost." Trump maintains that elevated interest rates are harming the U.S. economy, citing their role in driving up mortgage costs and exacerbating the national debt burden. Speaking again on Friday, he insisted that the Federal Reserve's benchmark rate should be reduced to just 1%, a level typically associated with efforts to stimulate growth during economic downturns. His comments underscore the mounting political pressure on the central bank, as borrowing costs remain high heading into a critical election period. Despite this push for lower rates, economist PeterSchiff offers a contrasting viewpoint. He argues that current interest rates, hovering slightly above 4%, are modest by historical standards. According to Schiff, the notion that Powell is being too tight with monetary policy is misguided. If anything, he's still too loose, Schiff contends, suggesting that the real issue is the continued reliance on artificially low rates to support a debt-fueled economy. This ongoing debate over monetary policy comes at a time when inflation remains stubborn and the cost of servicing U.S. debt is climbing rapidly. As both political and economic pressures intensify, the Federal Reserve faces increasing scrutiny from all sides about the path it should take moving forward. Let's get back to the interview.
In a recent interview, Donald Trump said that the job of being Fed chairman was the easiest job in the world. Basically, any idiot could do it. And so we need to get rid of Powell because apparently, even though any idiot could do the job, Powell isn't even up to the task because he doesn't understand that rates need to be cut. And in fact, it's not just Trump that's saying this. Everybody, especially if you look on X at Bill Pulte, who is the head of the Federal Housing Finance Administration, he's repeatedly calling for Powell to step down. He's blaming Powell for the high cost of buying a home because he's saying the mortgage rates are much too high. And that's the same thing Trump is saying, that because of Powell, it's so expensive for the U.S. government to finance its debt. And so it's Powell's fault that the interest expense is so high because the Fed has interest rates sky high. In fact, I hear a lot of people talking about how we have sky high interest rates. We've got a 4 handle on the Fed funds rate. There is no way you can argue that a rate that low is sky high. In fact, all of the criticism of Powell is because he's too tight, when in reality, he is too loose. Right? I am not a big fan of Powell either. I mean, I criticize him quite a bit, but I don't criticize him for not cutting rates. I criticize him because he cut rates. He cut them, he didn't cut them, rather. He took too long to raise them. He inherited low rates from his predecessor, and he left them too low for too long. And when he finally, belatedly, started to raise rates after claiming incorrectly that inflation was transitory, when he finally addressed the inflation problem, he was too late. I agree with Trump on that, but where I disagree with Trump is that he's too late to cut rates. What he was too early in doing was aborting the hikes. As I've said many times on the podcast, Powell stopped hiking too soon. He never got into restrictive territory. And the way you know that is because debt never stopped expanding. Consumer credit, corporate credit, government debt continued to hit new all-time record highs despite the rate hikes. And that's because the rate hikes were not enough. The rate hikes weren't high enough to cause a contraction in credit. Because remember, inflation is not just the expansion of the money supply, which did temporarily contract, although not nearly as much, and now it's back in expansion mode. But credit not only didn't contract, but accelerated its growth. And so the inflation fire that the Fed lit was never put out. What Trump really wants Powell to do is throw more gasoline on that fire. And because he won't do it, people want him to resign. In fact, if you look at the most recent statement by Trump, he said that we should have 1% interest rates. That's where he thinks rates should be. 1%. He says we deserve it, we should get it. And for some reason, this moron, this imbecile, Powell, is refusing to go to 1%. Now, think about that, because Trump is also talking about how strong the U.S. economy is, how it's unprecedented in its strength. It is the hottest economy in the world, according to Trump. And not just today, but historically. To hear Donald Trump talk about the current U.S. economy, this is the strongest it's ever been. I guess it's even stronger than it was when he was president the first time. Now, if the economy is this strong, why should interest rates be at 1%? Especially, and I'm going to get into the CPI data that came out earlier in the week, but the official CPI rate is much closer to 3% than 2%. And so given that inflation is well above the BS so-called target that the Fed has adopted, but if we have above target inflation and the strongest economy ever, why should rates be at 1%? The first time the Fed lowered interest rates to 1%, it was Alan Greenspan. And this was in 2003. Now, what was going on in 2003 that caused Greenspan to lower rates to 1%, which was a mistake? And I criticized Greenspan for doing that back then when he did it, because U.S. interest rates hadn't been 1% since 1950. And of course, in 1950, it was a whole different ballgame. I mean, we were on a gold standard. We had real money. We didn't have the national debt we have now. We did run up a big debt in World War II, but we were paying it down. But we had trade surpluses. I mean, we were a totally different economy back then than we are today. But that was the last time we had 1% interest rates, was 1950, before Greenspan brought them back down to 1% in 2003. But if you don't recall what was going on, first of all, we were in a recession. It was a mild recession, but we were in one. We had the September 11th, 2001 terrorist attack against the United States, where the planes crashed into the Twin Towers, knocking them down. Also, a plane went into the Pentagon. Another one crashed in a field. But we were at war, basically. Desert Storm or Desert Shield, whatever we called it. But we were having war with Iraq. And the NASDAQ was in a brutal bear market. The NASDAQ had dropped by 80% from its peak. I think the S&P 500 was about 50% off of its peak. So, we had a massive bear market. We had the bursting of the dot-com bubble. We had recession. We had war. And, in those circumstances, Greenspan brought interest rates to 1%. Now, he only left them at 1% for a year, despite all that stuff going on. They were only at 1% for a year. Now, the next mistake that Greenspan made was in normalizing rates too slowly.
Far from just another policy disagreement, the widening gap between political demands and monetary discipline is revealing the growing instability at the core of the U.S. economic machine. While lawmakers push for looser financial conditions ahead of elections, rising borrowing costs and swelling fiscal obligations suggest the room for maneuver is rapidly vanishing. At the same time, silver, long overshadowed in the monetary hierarchy, is emerging as a potential barometer of more profound dislocation. Soaring lease rates and supply constraints hint that the market may be preparing for a decisive revaluation. Could silver become the pressure valve through which suppressed economic imbalances finally erupt, signaling that monetary credibility is no longer just eroding, but unraveling? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.